With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, and welcome to the COB. I'm Nadine Blaney. It's wonderful to be here with you on the 24th of April of this very shortened trading week. Although, as my colleague Andrew Gagan wrote in one of our newsletters today, how long did that week feel because of the seismic shifts that really went on in global markets? We'll get you across what it all means, but I think we should start with the here and now. So even though we've seen US futures take a bit of a turn, we are still watching for some really good gains to come through for the local market today. So that's the CBO Australia Index, as I always point out, because some people wonder, why aren't we seeing the S&P ASX 200? Well, it pretty much reflects what we're seeing on the local market, and we will bring you the final figures when the last of the day's trades do roll through. But safe to say it's been a better end to the local trading week after what was a very disruptive April.
And what that means for investors is those headlines coming out of the US are having a huge impact in terms of our market. And that's what we're seeing today. It's nice to see that bounce back, and it is on hopes that we'll see a bit of a reprieve in terms of the tariffs, specifically the headlines centered around US-China negotiations. The Wall Street Journal overnight quoting a White House official saying that tariffs may drop there with negotiations from 145% currently to around about 50 to 65%. So those hopes are really driving the market today. It's great to see green across most of the board, tech as well as materials driving those returns, and that's understandable given materials has a huge impact from China, and tech also doing well in the US overnight. But on the flip side, oil prices traded at a 2-week low, and we are seeing some of those OPEC members pushing for another huge supply increase in the next couple of months. So that's having an impact in terms of oil. But yeah, nice to see a bit of a risk-on move, and small caps also outperforming the overall broader market.
Yeah. All right, so what we are talking about is the ascent of the ASX today, as I mentioned, happening even though we're seeing a little bit of the life come out of the market overall. We've also had a commitment to critical metals by the Albanese government. Of course, if they are elected once again, and some of the Australian critical minerals players have responded to that. And don't forget, we are in the midst of US earnings. So that was another factor throughout the week, garnering a lot of interest, given the fact that we had Elon Musk saying that he would be pulling back from some of his Doge commitments at the US government. We've got Google coming tonight. So that's the first of the big tech names. And we have some of the really big tech plays coming out a little bit later next week. So let's get through some of the sectors of the day that helped lift this market higher. So keep in mind that we had copper hitting a 3-week high, buoyed by easing trade tensions. Not only that, but we had iron ore prices lifting above that $100 per ton, per wet metric ton. If we can flip on the page there, guys, and just take a look at some of those iron ore miners. And we've got gold. Gold is coming back to life. Keep in mind as well, we've had results coming through from Newmont really being lifted by the price of gold. And just to round out the metals complex, aluminium prices gained alongside those other metals. Sentiment picking up on those easing tensions between, the United States and China in particular. So hopefully not seeing a major global slowdown, although most people I've been speaking with today are still expecting a slowing economy. Healthcare was one of those sectors that lifted the market overall. CSL did well for the market by market weight, up by about 0.5%. And of course, ResMed was one of the best performers in percentage terms. And we spoke with its MD, Mick Farrell, a short time ago. Of course, everyone has tariffs top of mind.
We at ResMed in 2009, when there were some tariff issues in the global world right then, the global economy, we got a confirmation from the US government, from Customs and Border Protection, CBP, in 2009, that our products were a disability, sleep apnea, insomnia, COPD, and we would therefore have a CBP confirmation of that tariff relief, tariff exemption. And right here in 2025, as you said, new administration, new approaches on global tariffs, we went back to CBP. We went back to the Customs and Border Protection Agency under the new Trump administration and said, we want to have a reaffirmation and confirmation that we still have tariff relief under this same protocol. And the answer was yes. So we have emails and documentation for that. And we're running with, a tariff relief, a tariff exemption for our products that treat sleep apnea, COPD, and insomnia, because these are for people who have disabilities.
Nonetheless, are you perhaps looking to de-risk, given that ongoing uncertainty we're hearing from the Trump administration, and perhaps move more of your manufacturing from your hubs here in Australia and Singapore to your new facility in California?
Well, Andrew, it's less about reducing our footprint in Singapore or Sydney. They're sort of foundations of our global manufacturing footprint in those two countries. So we have a huge facility in Singapore that we just increased its development of and signed an agreement with the Singapore government, the EDB, for 5 years of growth. And we've got a great public-private partnership with R&D tax credits and so on with the Australian government that we've invested for 36 years that the company's been around and will continue to invest in. But in addition to both of those, we are also investing in US R&D, manufacturing, and distribution. So a couple of things I talked about in our investor call. It was just a couple of hours ago here. We are increasing our investment in Calabasas, California. We're creating a 122,000 square foot facility from scratch that will double our US manufacturing footprint for R&D and manufacturing of our motor technologies, as well as some of our silicone mask lines. We've also got the capability in Atlanta, Georgia, where we have a 522,000 square foot campus to expand some of our manufacturing and certainly continue to expand our distribution for the East Coast. And we're also thinking about and looking at plans for an expansion of distribution within the Midwest in the United States. The final thing I'll say is that we have increased already by tenfold our investments in research and development here in the US, and it's mostly around software. So think software for the cloud, like apps like myAir for patient, AirView for physicians, Brightree for HMEs, and Somnoware for sleep physicians and sleep physician practices. We're going to continue that investment. So if through these tariffs that are impacting some other industries and some other countries that not ResMed, the US government will raise some funds and they want to provide some tax relief beyond the extension of the 2017 tax cuts that they said they were going to continue. And there are some R&D tax credits or manufacturing growth or distribution growth credits. ResMed will certainly look to participate in those. We're not changing our strategy because of this new administration, but the new administration seems to be overlapping with our needs to increase manufacturing here in the US, which is our largest global market for selling our CPAPs, APAPs, bilevels, masks, and our software globally.
All right, now the stock of the day was ResMed. Let's hear from our experts on the call, Anthony Golowenko from MLC Asset Management and Mark Gardner from MPC Markets.
It's just continuing to do all the right things. They've got a new FDA-approved night owl home sleep test as well, which is going to start to... Because one of the things that McFarrell's always said is that even when the GLP-1 drugs came out, it's not a very diagnosed condition, and everyone laughed at him. I think initially when he said, "Well, the GLP-1 drugs will raise awareness of sleep apnea," but that's actually what's panned out here.
This is a quality growth company. A theme we've been working with really over the last 6 to 12 months, in the absence of outright growth, is this doing more with less. So where revenues or sales may be flat, an ability to expand margin. We saw the ResMed result really as doing more with more. The 9% constant currency increase in revenues and expanding margin just goes to that quality. It's a position we hold as a core. We will flex periodically when valuation starts to push a bit higher.
So that is ResMed. I did mention as well Newmont, just to reiterate, it reiterated its FY25 guidance, saying it will distribute a 25% share dividend for the first quarter of the calendar year. Also, Liontown, it gained on a record third quarter output and strong revenue. I mentioned that the Prime Minister, Anthony Albanese, has pledged to set up a critical minerals reserve, and that is why we're seeing Iluka, IGO, Lynas, and Australian Strategic Minerals rise. We had a statement from Australian Strategic Minerals just obviously looking pretty favourably on that policy being put forth by the government. Of course, it does win the election now. Also, premium in the smaller end of the market rose on an upbeat quarterly funds under management, rising 17% as of the end of March. And Raise Invest also having a great day. Upbeat results for the quarter. The financial company reported a 23.1% rise last year in funds under management for the third quarter. On the flip side, though, Cettire extended losses that it began yesterday after flagging direct risks from tariffs, softening demand in its largest market, the US, and the direct impact on the sale of Chinese manufactured items in the US because of tariffs. All right, let's get to some of the market leaders today. Paladin, Clarity, Deep Yellow, Boss. We saw Paladin report quarterlies yesterday that did surprise the market to the upside, and that has had a pretty good impact across that uranium sector locally. Clarity, again, it's just a very volatile stock. I know that I say the same thing pretty much every day with Clarity, but up a further 11% today. In ResMed, in the wake of those quarterly results, up by close to 9%. Generation Development was out with a quarterly, and the shares there were down by 16%. Woodside also getting knocked around. Technology One, Premier Investments, and Sigma Health. In the small to mid-cap space, we saw Frontier Digital rising 12% to 28 cents per share. And on the other side of the equation, we do have Cettire, there you go, it's down by 6% to 47 cents, as well as Imugene. Yeah, how that market darling has fallen down by a further 5.6% to just 3 cents per share. Overnight, we have U.S. existing home sales. They are expected to fall to 4.1 million, and the U.S. durable goods orders could be lower as well. We also do have American Airlines, many more than this, but American Airlines, Pepsi, Intel, Google, and T-Mobile reporting. Next week is a big one, though. We get Apple, we get Microsoft, Meta. But Morningstar's Bryce Anderson is a little cautious on some of those top tech names.
I think we'd be avoiding expensive things where the bar's really high. So I think with the US, yes, some of those high growth, high excitement businesses, the Magnificent Seven, they still have a really high bar to jump. The likes of Nvidia, etc. We're looking to have a lower bar to jump over, and some of those things like Nike have a much lower bar. So still cautious on some of those higher growth, Magnificent Seven names. But if the price continues to fall, they might become much more exciting for us.
So that was Bryce Anderson from Morningstar there. Locally, in the week ahead, yes, we are in the final days of the election campaign. Yes, we get international goods trade with a $2.8 billion surplus expended. We get PPIs, but the big one is the CPI on Wednesday. So that is for the March quarter, and this is instrumental when it comes to what the RBA will do when it meets in May. I spoke with Phil O'Donoghue from Deutsche Bank on that one.
So really, I think for the RBA, that really just puts the emphasis back on domestic conditions. And first and foremost for the RBA will be the quarterly CPI, which is out next Wednesday. My sense, the key number, the magic number next week will be the trimmed mean inflation for the quarter. My spreadsheet has that coming in at 0.6% for the quarter. The RBA is looking for a number closer to 0.8. So if we get a 0.6, that's softer than the RBA expects, and I think that will be enough to see them cut in May.
Phil O'Donoghue saying that it won't be one and done. There will be further interest rates cuts to come, 1, 2, 3, 4 probably in this year. So just a quick check as to where we are finishing this shortened trading week with the CBOE Australia Index up by about 0.5%. And taking a look at the S&P ASX 200 as well, similar gains being seen there. We've got the market up by 0.6%. And we have 9 of the 11 sectors ending higher. The exception was the energy sector, the exception as well being consumer staples. So it was a brief. It was just Tuesday, Wednesday, Thursday, but it was well worth the watch. All of those interviews that we did highlight in this program, you can find online at ausbiz.com.au. You've got a whole 4-day weekend to check out any content you may have missed throughout this week. And we hope everybody has a happy and healthy long weekend, and spare a thought for all the Anzacs on Anzac Day tomorrow. We'll be back on Monday.